Nike CEO John Donahoe has officially announced his retirement, and after the stock has performed so poorly over the last few years, it's clear that this may not have been voluntary. So in today's video, we are going to discuss this change as well as the new CEO who's coming in and their potential vision for Nike, and take a look at their upcoming earnings. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Last week, it was announced that John Donahoe would be retiring as of October 13th. With this change, John will still remain as an advisor at the company through January 31st of 2025. However, this announcement is very interesting because it says the board and John Donahoe have decided that he will retire from the role as president and CEO of Nike. The wording of this announcement clearly indicates that the board has made the decision that John is no longer the person for this role at Nike. They want to make a change at the top level of the company to really change the direction that Nike is headed. John Donahoe became president and CEO of Nike in January of 2020. From there, the stock price has fallen around 15%. However, during his early years, he saw a lot of success around the pandemic, with transitioning Nike to be a lot more direct to consumer. And during the early years of this transition to being more direct to consumer, they were showing a lot of success. In June of 2021, their revenues increased 19% year over year, with Nike direct sales increasing 73% year over year. And with the cutting out of the middlemen of retailers, they saw their gross margins increase significantly as well, up to 45.8%. However, fast forward to today, in their most recent earnings announcement, Nike direct revenue actually declined 8% year over year, while their wholesale revenues increased 5% year over year. And the big concern for investors right now is where will revenue growth come from in the future? Because of the last 4 quarters, all of them have shown growth of less than 2%, with their most recent quarter showing an actual decline of revenue by around 1.7% year over year. And these concerns from investors have only increased over time, as a lot of the shelf space that Nike used to hold within retailers was eventually overtaken by new brands as Nike pulled out of some of these retailers to focus more on their Nike Direct brand. And with the retirement of John Donahoe, Nike turned around and announced their new president and CEO, Elliott Hill. He will be starting in the position on October 14th. And Elliott Hill previously worked for Nike for 32 years. At the time of his retirement in 2020, he was the president of Consumer and Marketplace, leading their commercial business as well as marketing operations for both Nike and the Jordan brand. And this appears to be a very intentional move from Nike. They want to find someone who is a veteran at the company to come in and restore what Nike used to be, where they were very focused on their retailers and providing support for their retailers to sell their products, as well as providing new and innovative products around the field of sports. And a big reason that Elliott is being brought in as CEO of the company is because of his experience in North America and Europe. During his time previously at the company, he was focused on these 2 geological locations and growing their footwear business, which if you look at Nike's most recent earnings report, these 2 areas, especially in the area of footwear, have seen declines year over year. And honestly, I think that Elliott's in a very good position because he doesn't need to get to revenue growth of 15 to 20 or 25%. If he's able to get back to growth in the high single digits to low double digits, I think that would be an acceptable mark for Nike. Along with that, I think that the macroeconomic conditions within the US as well as the global economy could be changing that may benefit Nike as a whole. What we've seen in the last few years is inflation has gone up in a major way, and that has caused a lot of consumers to look at their wallets and look at how much they're spending at the grocery store and pull back in spending in other areas, specifically on items that are maybe nice to have items like what Nike offers. Nike is set to announce their earnings here in a couple of weeks on October 1st, and analysts have their EPS estimate sitting at 53 cents, while their revenue estimate is sitting at $11.64 billion. Obviously, in this upcoming earnings announcement, we're not going to see a big fundamental change from Nike because this time period has been the last 3 to 4 months. However, in the future, the question is going to be, how is Elliott going to come in and change the dynamic of the business to really affect their earnings in the long run? And these earnings are basically a match of what Yahoo Finance analysts are expecting. They have an average EPS estimate of 52 cents with a low estimate of 45 cents and a high estimate of 62 cents. A year ago, they put up an EPS number of 94 cents, which is very interesting because if you scroll down a little bit, analysts for Nike have been extremely low in their estimates. In the last 4 quarters, they have beaten estimates by 27%, 21%, 32%, and 21.7% in the most recent quarter. So if we go back and we take this average EPS estimate of 52 cents and we say that Nike's going to beat by around 25%, that means that Nike would put up numbers closer to 65 cents. Overall, I think if Nike comes through with numbers close to 65 cents, investors will be very disappointed. The company right now has done a very good job of keeping their earnings around that dollar mark, and I think that that is important for the stock not falling more than it already has. If they come through and they're putting up these lower numbers, I do think that we'll see Nike likely trade down after the announcement. And honestly, I don't think that would be a bad thing for investors who have been sitting on the sideline and looking for an opportunity to get into Nike. Because one of the biggest issues I've personally had with Nike and not buying into it is the fact that the valuation tends to be on the higher end, especially compared to the broader market. Right now, the forward P ratio is sitting at a 28.01. And that's pretty crazy to me when you can buy a company like Alphabet at a forward P ratio of an 18.8. That means investors who are buying into Nike are spending $10 more per dollar of earnings to buy into Nike versus buying into a company like Google. But who knows what will happen? Nike is a premium brand. They don't have a ton of high-level competition in their market. As long as Nike really performs at a relatively decent pace, the company is going to continue to grow. They just need to focus more on their retail business and getting back into those retailers. For me, I wouldn't be surprised if the company does fall further after earnings, but in the same instance, if there are some positive things that are announced, especially around the outlook of the company and where it is headed in the future, I could see Nike also going up, $10, maybe even $20 and breaking $100 per share. But we'll have to see what happens here on October 1st when they come through and announce their earnings. But keep in mind, do not buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what's it called when a snowman throws a tantrum? Check the comments down below for the answer. Thanks for watching.